And to me, this is where we believe it's going. So we're looking at Bitcoin, we're looking at ETFs in the same manner. These are technological changes that can allow us to move forward.
What does BlackRock expect in 2024? Investors must manage their portfolios with greater vigor. This is the moment to take charge of your investing, not to put it on autopilot. We believe that taking portfolio risk should be done carefully, and we want to increase risk over the coming year. Should big asset managers be held to the same standards as insurers and banks? Financial behemoths like BlackRock, according to the industry, don't threaten the market. Our findings, however, paint a quite different picture. BlackRock is a titan of the financial industry, directly controlling assets worth around $4 to $5 trillion until recently. The Financial Stability Board, FSB, kept a close eye on BlackRock. The Financial Stability Board, FSB, has designated 30 banks and 9 insurers as systemically important financial institutions or too big to fail since the global banking crisis, stating that they are subject to stricter oversight and regulations. Their logic is predicated on the idea that BlackRock and similar companies are merely money managers for other people, as opposed to banks, whose loans and deposits appear on their balance sheets as assets and liabilities. Because of this, asset managers are in charge of the investments they hold for other people. Asset managers exclusively invest the money they receive from investors, as opposed to banks, which leverage the money put with them. If an investment performs poorly, it loses money, but the asset manager bears no systemic risk to the market. According to The Economist, having a large participant in the financial pond actually helps to maintain a healthy financial climate, since an unleveraged asset manager may handpick assets at a discount from sellers who are experiencing financial trouble, stabilizing markets rather than upsetting them. On the surface, they are most likely right. The issue with this argument is that it fails to consider the impact that concentrated ownership, especially from a company as large as BlackRock, has on other participants in the financial pond. Although it has previously been demonstrated that concentrated ownership can result in financial fragility, there is currently no data regarding the ex-ante effects of a shift in ownership concentration on other investors' market behavior. In order to achieve this, my co-workers Yan Wang, an assistant professor at Erasmus University, and David Schumacher, an assistant professor of finance at McGill University, and looked at how the 2009 acquisition of Barclays Global Investors, BGI, by BlackRock affected a range of equities around the world. A significant deal in the business, the BlackRock-BGI merger, directly affected equities that accounted for over 60% of the global market capitalization. The study took into account 2 opposing theories. The first was that a higher ownership concentration would indicate to investors that the asset manager was purchasing high-quality shares, which would spark interest in the stock and raise its price and liquidity. The other hypothesis examined the likelihood that should BlackRock encounter an idiosyncratic shock that prompts a fire sale of its holdings, investors would become concerned about growing concentration because of the possible negative impact on the share price. Alternatively, if investors started selling off their stock ahead of time, encouraging other investors to follow suit, they would create strategic complementarities that are comparable to the fundamentals bank runs. This second fire sale risk theory turned out to be accurate. After the BlackRock BGI acquisition, other institutional investors rebalanced away from companies in which BlackRock had a larger holding and toward comparable stocks that were not owned by BGI funds before the merger, according to a close examination of the data. Large increases in BlackRock's ownership concentration in the stocks that resulted from the merger caused negative returns that did not entirely reverse. Instead, the stocks were permanently less volatile and less liquid. This implies that there are more factors to take into account when examining systemic risk in the marketplace. Every move a big elephant makes in a pond has an impact on the other participants. They will hurry to be the first to sell if they think that everyone is afraid the large elephant will be sold. This is what's taking place. By steering clear of the equities in which BlackRock has assets, other asset managers are logically adapting and taking the market's fear of its destabilization into account. These companies, which have the potential to be very strong, are suffering from the repercussions. Their prices are declining and their liquidity is decreasing. Investors gain from BlackRock's expertise and economies of scale, so they aren't necessarily losing out. The stocks themselves are the biggest losers. Their prices are being forced lower by the perceived risk. risk. This is not a forecast for the future. What we are demonstrating is that the market is already factoring in the prospect of a disaster. Not that if BlackRock experiences financial fragility, there will be a disaster. Fear about potential idiosyncratic firm events in the future, rather than company events per se, is what drives financial instability. Though they may have authority over the investments they own, big asset managers like BlackRock have little say over how other investors handle their money. Their mere presence carries significant systemic ramifications and actual, inescapable risk. The BlackRock Foundation, which aims to assist individuals in achieving financial security and taking part in an inclusive transition to a low-carbon future, and our employee engagement programs, which provide employees with the tools to become change agents in their communities, make up BlackRock's two main pillars of social impact. One of the most important aspects of creating financial security is assisting people in obtaining a consistent and upwardly mobile income. The BlackRock Foundation funds initiatives that reskill, grant credentials, and establish fair career routes in 14 different nations. BlackRock's Emergency Savings Initiative brings together nonprofit financial health professionals and partner organizations to make saving more approachable and easier for low to moderate income individuals in the US and the UK. The Catalyst program at Breakthrough Energy will benefit from a $100 million 5-year grant from the BlackRock Foundation. This funding will help advance clean energy solutions at scale, bringing the globe closer to net zero and lessening the uneven effects of climate change on communities. Every year, local nonprofits chosen by their colleagues receive donations ranging from $5,000 to $25,000 from employee-led gives committees. Task forces formed by employees seek out and provide funding to regional grassroots groups in the US, UK, and Europe that are committed to racial fairness. The company matches up to $10,000 a year in donations or volunteer hours from each employee in support of organizations that are important to them. BlackRock initiates a 2-to-1 match for employee donations to increase support during times of community crisis. In Canada, the new regime of increased macro and market volatility is being experienced. There has been a prolonged period of economic stagnation, ongoing inflationary pressures, and a gradual tightening of policy. Investment portfolio management in the new regime must take a more proactive stance due to the increased unpredictability and return dispersion. For income, we choose short-term Canadian bonds. We are watchful when it comes to credit, and we concentrate on quality when it comes to Canadian stocks, especially those in the energy sector and those that profit greatly from artificial intelligence. The markets have been oscillating between expectations of a mild economic recovery and concerns about more rate increases that could trigger a recession. The chart indicates that volatility has resulted from this. We believe that the US economy has been managing two significant shocks. The pandemic was the first. The majority of newly created jobs in the last 2 years have resulted from the resumption of operations following shutdowns. Like the Catholic Church in the past, banks, hedge funds, and the rich elite continue to hold substantial political power in the 21st century. Corrupt practices in the Catholic Church and banks and hedge funds such as BlackRock are contrasted, emphasizing the connections to Epstein and scandals. The wealthiest 1% in the country own 15 times more than the lowest 50% combined. And during the COVID-19 lockdown, the wealthiest 10 billionaires doubled their wealth, which contributed to a rise in poverty. A vicious circle of wealth disparity is perpetuated when affluent firms such as BlackRock and JP Morgan receive loans at almost 0% interest, while the general public is burdened with high interest rates. Recent bank failures and the speedy takeover of smaller banks by larger ones, such as Chase, draw attention to the risk of a bank monopoly and raise questions about the concentration of power in the hands of a small number of powerful businesses. It is said that the Catholic Church maintains social hierarchy and practices mind control through education and information access, notably by maintaining holy literature in Latin. Both BlackRock and the Catholic Church are contentious because of their enormous riches, control over information, and political corruption. Since the Protestant Reformation challenged the corruption of the Catholic Church, the power of the Catholic Church has declined. Now, with the help of cryptocurrencies, we can use cryptocurrency to overthrow the control of banks and hedge funds, support small businesses, and hold politicians accountable for a possible future of freedom. That's all for today. If you liked this video, please give us a thumbs up. Make sure to subscribe to our channel and hit the bell icon to receive notifications. Also, express your valuable thoughts in the comments section below. Until then, bye. Also, spend some time watching other videos on the channel.